I've been in financial services for over 30 years, and I've had the pleasure of working in about 13 different countries in my career. And there's the grocery store, there's the acquiring bank, which provides the POS machine, there's the issuing bank that issues your credential in the first place, and then of course there's the technology provider, in this case Visa, that enables that whole thing to happen, but it happens in a millisecond. You know, when I started my career, fraud globally was about $800 million around the world. $800 million worth of fraud. This is like mid-90s, it's a long time ago. I think many of you are still at school, but I started my career. And fast forward that to today, fraud is about $18 billion. And you no longer need your grandparents to kind of guarantee you. You can actually just use your behavioral metrics to highlight your credit worthiness in doing that.
Hello and welcome to another episode of All Things Money. I'm your host Fatima Attarwala, and with me today is the Region President of Visa, Tareq Muhmood. Hello sir, welcome to the show.
It's great to be here. Thanks for having me.
It is a pleasure to have you. With me today also is my co-host Ammar Habib Khan.
Hello Tariq, really thank you for joining us today.
Thanks Ammar.
So your experience spans many countries and many decades. Maybe you could walk us through your journey of Asia Pacific region, Europe, and what you have been doing over the years.
Yeah, thanks for having me. It's fantastic to be in Pakistan. Great to be on your show. So I've been in financial services for over 30 years, and I've had the pleasure of working in about 13 different countries in my career. So markets ranging from Hong Kong to Singapore, Brunei, small markets like Brunei, and then in the US, I've spent some time in New York, and then in Europe, but a huge amount of time in this region, from the Middle East to Eastern Europe, and then Africa. And I've been with Visa for about 6 years. And before that, I was in banking for 24 years.
Wow.
But what's been a privilege is being part of Visa is now serving the industry that I used to be part of, and really looking at how we can leverage our technology stack to make an impact with our clients in markets like Pakistan. So that's my background.
So what potential do you see in this region?
There's just so much opportunity. You know, we're really privileged. Visa's been around, just so you have some context, for over 60 years. And we have partnerships with about 14,000 financial institutions globally. And we look at partnering with those financial institutions to serve their clients. And their clients are either consumers like ourselves or their businesses, whether it's small businesses or large corporates. And economies like Pakistan, which are going through a good patch at the moment, a good sized population, a lot of dynamism in the economies, there's a real thirst and need to provide secure payments, to enable commerce to happen. So it's really partnering with all our clients, whether it's the traditional banks or the fintechs, to make an impact.
So I would assume that in a country like Pakistan, where there are a lot of SMEs, where there's a lot of informal sector, what role can Visa play a role? Has there been any experience in other countries that you can see that can be replicated in Pakistan to formalize the informal sector?
So there's a few things. There's a few themes that we see as Visa, and I'd probably call them like moments of truth. And so we have the likes of us as consumers whose needs are evolving rapidly. And you have, so for example, customers are much more demanding in trying to drive, to having more instant experiences. And I'll give you some examples there. And then we're also finding that our corporates, our companies, the banks that we work with, are trying to be more innovative. But then finally, we also see that risk is also changing. But maybe I'll just give some real examples on the moments of truth. So if you're traveling around historically, and you may have had two relationships with two banks, and you have a card with both banks, and you're traveling, say you're overseas, and you happen to lose your wallet, and you contact Bank A, and you say, listen, I've lost my wallet, I'm still on holiday with the family, can I have a new card, please? And they'll say, sure, we can mail it to your home address. But of course, if you're traveling, that's not going to be great. And really the demands of customers is that they want to be digitally enabled much faster. So you contact Bank B, and through their app, you can create a new card straight away. And so you can still enjoy your holiday, you can provision it. In Pakistan, we enable it through Google now. You can provision it to your Google wallet, and you can continue enjoying your holiday. So those are moments of truth that really Visa's technology stack enables with our clients. But another theme that we see is a lot of our clients are looking to innovate quite quickly, and they want to really go to market. So we had a proposition recently with one of our clients who wanted to target the youth segment. They wanted to have a special offering to the youth segment. Now, traditionally, it would have taken them 18 months using their technology stack to go to market. But technology has been such a great enabler with cloud, etc. So with one of our key partners, we managed to go to market in just 4 months by using Visa's tech stack to move much faster. And then the final theme I touched on was just the risk environment. Risk has changed hugely. You know, when I started my banking career in the early 90s, fraud risk was minimal. You know, fraud risk was like fake signature fraud. But nowadays, you know, all our identity is under risk. You know, we've got to make sure our password protection, authentication, but we've enabled so much commerce with tokenization. And I have to say, in Pakistan, the adoption of tokenized payments, which are secured payments, has gone through the roof. So we're seeing huge take-up of tokenized transactions, which just allow for a much more secure payment transaction. We actually see in Pakistan the adoption of tokenized payment is faster than we've seen in many other regions around the world. So it's really great to see that. But I think it's just still a starting, a longer journey ahead.
Really, I mean, I did not consider Pakistan to be technologically advanced enough to understand tokenization, much less, have a high rate of adoption. And would you be able to comment what makes it so in Pakistan? Maybe it's the youth or the Gen Z population that is increasing the rate of tokenization?
Yeah, I think it's a lot of things happen behind the scenes. When you and I make a payment, we just expect it to be seamless. Mm-hmm. You know, we expect it to go through. If we're buying online or if you're visiting a store, you expect it to go through. I have to say we have amazing partnerships with a lot of the banks and fintechs here, as well as the acquirers and payment facilitators who expand acceptance to develop the tokenization environment. So you need it on both sides of the ecosystem. So the people that issue the cards or the digital credentials need to be enabled to make it tokenized, but also the merchants receiving that payment need to be enabled to receive a tokenized transaction. And the beauty of it is that it's encrypted with a level of security that just has never been breached. So tokenized transactions just allow that peace of mind that when you and I are shopping online, it just allows for that experience to happen. And I have to say, it's really down to the focus of our partners in Pakistan that has enabled that acceleration.
So in my previous conversation with Visa, with the Visa leadership, there was also an emphasis on SMEs and how we can use credit card payments, Visa payments to build credit histories for SMEs. Now, is that something that you've seen and happen in other markets as well? Some experiences that could be translated to Pakistan?
Yeah, there's so much growth. Small businesses are really the economic drivers for many of these markets, and Pakistan is no exception. And of course, other than just basic payments experiences, a lot of small businesses do need access to credit. And the beauty of the Visa network is that as people make payments, you can actually see their transaction history and see that the regularity of that payment, of what it's paid for, which suppliers are they buying supplies from, who are they receiving payments from. And then as a lender, you're then feeling a bit more comfortable that saying, hey, listen, I can give credit to this small business because I have visibility over what they actually do. It's very hard to do that with cash. And it's very hard to do that with some alternative payment means as well. You may not have the data that's so accessible than what you do on the Visa network. So we do see the adoption of that. Lending to small businesses does still need attention. It still needs growth. It needs the ecosystem to participate. But it is enabled through better technology like the Visa network.
You know, Ammar is the CEO of the National Credit Guarantee Lending. Am I getting this right? NCGCLC. So I think he would be able to comment on the importance of building credit history through payment systems like Visa, and perhaps he could have more questions regarding that.
All right, so Tariq, just like one thing that really fascinates me about payments is how so much coordination just happens at the back end. You've got multiple institutions talking to each other. You've got multiple entities just talking, and everything happens seamlessly. Can you just guide our viewers in terms of how does the transaction actually work? And what are the economics of it all? Just the building blocks for people to really understand how the whole complex mechanism actually works out.
Yeah, it's a great question, Ammar, and I'll probably put it into two buckets. Let me just talk about a payment and how that kind of comes together, and then I'll talk about our technology stack and how we bring that to life to enable that to happen. But just from a payment angle, so if you and I go shopping, say you're traveling to Canada at the moment and you go into a grocery store and you use your Pakistan issued Visa card to buy something. So say you spend 50 Canadian dollars at that store. Now, that store will not receive 50. They'll probably receive 48 or 48 and a half dollars when they make that payment. So they'll receive 48 and a half. The Canadian bank that provides the terminal at that Canadian store will have a cost associated with providing that terminal and that service. So they'll charge a little bit out of that 50 that gets knocked off, whether it's 30 cents or 40 cents, etc. And then your bank in Pakistan that issued you your Visa card also has a cost in providing that service in a secure manner as well. And so they'll also have a piece of that transaction, 0.2, 0.3 cents of that transaction. And then Visa or MasterCard or Amex, depending on who the underlying technology provider is, will also take a very small 0.05 or 0.1 of that transaction. So there's a few players involved in making that transaction happen. There's the grocery store, there's the acquiring bank, which provides the POS machine, there's the issuing bank that issues your credential in the first place, and then of course there's the technology provider, in this case Visa, that enables that whole thing to happen, but it happens in a millisecond, that whole payment experience. And now the merchant needs to have peace of mind they're actually going to receive that money. The issuer needs to be comfortable that you actually have the money in your account to make that payment. So there's a lot of technology involved to allow that payment experience to be seamless and secure. Now, if you can imagine, with the growth of e-commerce that's happened around the world and the growth of travel, with people traveling, especially post-COVID, the demand for the transaction growth that we're seeing is huge. And so the security around that transaction growth needs to be significant. There's a lot of bad actors out there. So we've invested a huge amount of our own investment into making sure those payments are secure and that we're elevating the scoring of that. So suddenly, for example, if your Visa card comes up in a Greek or Athens-based merchant, we know that's an elevated risk. It's unlikely to be you. So we'd warn your bank that this might not be you and they may want to take extra caution in authorizing transactions. But all of that has to happen instantly. So that's the payment experience. I hope that kind of explains it quite clearly. From a Visa perspective, we provide we call it Visa as a service. And it's really a foundational layer of technology that allows our clients to leverage, depending on who the client is. It could be a fintech, it could be a large bank, it could be a sort of telco company that suddenly wants to start issuing cards, etc. And it starts off with the foundation layer, which is the Visa network in over 200 countries with 14,000 relationships. It then adds a service layer, which is all the ability to authorize payments and to settle payments. So in the example we shared, we need to provide settlement. We need to take the funds out of your account in Pakistan and make sure the Toronto-based grocery store receives it pretty quickly. And so that's really the service layer. And then we have a solution layer of technology that includes risk tools, that includes data tools, that includes the ability to accept payments on your mobile phone or make payments using your mobile phone. And so there's a whole stack of solution capabilities. And then the final kind of layer of that technology stack is the connectivity. Through APIs and SDKs, how do we make it easier for fintechs in Pakistan, for example, to go live quickly through ease of connectivity and ability to sort of move in an agile manner? I hope that kind of explains a little bit. That's what I've learned in 6 years of being in the payments system, sort of environment with more intensity than I was in my past. But I hope that's all clear.
This definitely helps, and I would call myself a student of this as well, because it's just really complex, and how you've been able to explain over the last, I would say, 3 to 4 minutes is pretty, I would say, clear in terms of what to expect. So in terms of Visa, one thing that we have seen as the number of transactions have grown and as the volume and the value of both have grown, I would think that the overall fraud risk would have also increased. So just in relative terms, how much has fraud risk increased over the last, let's say, 5 years or 7 years or post-COVID? And what are the various mitigating strategies that entities like Visa are using to really mitigate or eliminate fraud risk, for that matter?
Yeah, this is an incredible conversation. When I started my career, fraud globally was about $800 million around the world. $800 million worth of fraud. This is like mid-90s. It's a long time ago. I think many of you are still at school, but I started my career. And fast forward that to today, fraud is about $18 billion. It's impacting commerce by about $18 billion. This is all kinds of fraud. And so that the amount of protection that's needed, but when you think about protection, it's not only to stop the bad actors from conducting fraud, but it's also to allow good transactions to still happen with minimal friction. So the investment that we've made, not only in the Visa network to make sure Visa transactions are secure, but we've now enabled, through the stack that I talked about earlier, enabled our technology to be used for all payments types. So we've gone live in a few countries, in the UAE, in the UK, in Argentina, where we're offering our risk capabilities to other payment forms other than Visa payments. So it allows banks and fintechs and others to really use our algorithms and our scoring mechanisms to make sure that we're identifying which transactions are good and which transactions are potentially high risk, and we need to have a greater amount of friction to make sure that they're not bad transactions. And generally the way that looks at, so for example, on an A2A payment, that's not a Visa payment. So say you're making a payment from one bank to another domestically. That doesn't involve going on Visa cards or anything. Sometimes we see that actually we're seeing irregular behavior in that. So normally you'd make a payment at 10 a.m., but suddenly we're seeing an attempt to make a payment at 4 a.m. So that should have an elevated risk score. And say the beneficiary of the payment where it's being received is a very new account. It hasn't been established for too long, and it has a name that just sounds that it might not be legit, etc. So then we'd have a higher score for that, saying, hey, you might want to double check, is this beneficiary really legitimate? Because even if you authenticate the payment as a consumer, you may be tricked. There's a lot of trickery that happens with social fraud, identity fraud that happens, that even a parent or an auntie or uncle may be tricked to make a payment that they shouldn't be making. So you want to try and protect them as well. But I think this is going to be an ongoing journey that we're hugely invested in to try and make sure that that we're protecting all the good commerce that should be happening.
So you mentioned that from the 1990s to now, the level of fraud has grown many times over. What basic measures can consumers take, or retailers or point of sales persons can take to protect themselves from fraud? And how does Visa enable that awareness?
Yeah, it's really good. So you can't underinvest. Mm-hmm. Having been also in the banking industry for a long, long time and attending risk committees, I've seen it when banks underinvest in risk tools where you can really monitor and score transactions and have the right capabilities in place to try and mitigate and minimize the risk that you're exposing to your clients as a banker. And so you really want to not only protect your own P&L as a bank to make sure you're not losing money through losses, but you're already protecting your clients so they have trust in your brand as well, that you really want to have the right tools in place. So you have to really keep investing in your risk tools and make sure that's in place. And then as a consumer, we ran a campaign called on improving your security knowledge that we're running through all our partners. And we're running a campaign just to increase the awareness. And that's never a one-off exercise. So we spend a lot of effort and money and time just really educating the ecosystem, both merchants, so that when they're receiving money, they know that they are going to receive the money, but also for consumers, so they're well educated on their password protection and identity theft protection, etc. But really, it's really important to try and just make sure that if anyone's asking you to send money, you know who you're sending it to, and there's a lot of basics, but you can't I still know so many educated people that get tricked one way or the other to make a payment that they shouldn't be making.
So suppose that does happen, somebody gets conned, there's a fraud, and a few $1,000s the person loses a few $1,000s. What measures does Visa take, and what measures do its partner banks take or financial institutions take to remedy that situation? Or is there something that can be done, or is that the money just gone bye-bye?
Yeah, no, luckily on the Visa, there's two. So let me categorize payments into two types. There's Visa payments and there's non-Visa payments. So on Visa's network, we have a lot of rules around how payments should be authenticated, authorized, and paid. So it's really clear that where the liability lies in the event of fraud happening. And generally, it's to protect the merchants and to protect the consumers. So the banks carry most of the responsibility to make sure that they're protecting their clients using our technology as much as possible. Where we're seeing most growth of fraud is outside the Visa payment network, as I gave you the example on A2A fraud. But it can work in other ways. There was an example, and this is a true story, a very high net worth individual wanting to pay the medical bills of his partner, of his wife. and he called the bank up. He went online to make, it was a few £100 that they needed to make online. This is a UK story. And the bank said, sorry, this is a new beneficiary. You've never paid that beneficiary before. Please call the call center. So this is an important payment. There's an operation that needs to happen. So they call the call center and says, I need to make this payment. And this is after 20 years of banking with this organization. And the bank said, sorry, you need to visit a branch now to make the payment and update your KYC and things like that. So the person went to the branch to make the payment because of course it's important to make the medical payments, but decided to close the account after 20 years, just because the level of friction was so crude, it didn't help, it didn't support him. So banks really need, by having the right level of investment in their risk scores, they're able to decide, okay, is this really a high risk transaction, making a payment to a medical provider that's been around for a long time, versus a potential scam. And by taking too crude actions, you can then create too much friction that you end up isolating your customers and making them move somewhere else. And nowadays, it's so much easier for us to move our banking relationships than ever before. The competition out there by banks and fintechs is so much easier for us to have that. I'd say a few years ago, it was a lot harder. So you do need to keep investing. Absolutely.
I think in a system where we're used to making payments on tap, to go through the entire experience of having to go to the branch, I mean, I can understand why the whole purpose of Visa and the entire banking system is to be seamless, is to be fast.
Correct. Right. Correct. That's right. But you can only do it if you have the right technology. But the technology keeps getting easier and easier to access, as I highlighted. But still, there's work that has to happen by the end provider, because we're a B2B technology provider largely, but it depends on our partners on how they enable that experience, but we work very closely with them to try and provide that experience seamlessly to their consumers or merchants or businesses.
One thing that we saw post-COVID was essentially emergence of a number of domestic payment systems. You've got the UPI in India, you've got Rast in Pakistan, you've got other systems propping up everywhere. So how does that pan out? Visa does it great on a cross-border basis, but for pure domestic payments, how do you see the landscape changing, not just in Pakistan, but globally as well?
Yes, a really great question, Ammar. And I am thrilled when I see that countries kind of introduce different competitors to payments, because I think if you have an open playing field, competition's healthy, it creates innovation, it creates pricing pressures, it creates better value propositions for clients as well. So, and we find that we often compete against other payment methods, but we also collaborate with other payment methods. So as I highlighted, around the world, we provide our risk capabilities, for example, to some payment networks that are traditionally considered competitors to Visa. So we do see that. And I think the more competition there is, I think it's better for society, it's better for the communities, it's better for consumers and businesses. I do feel the Visa network continues to be the best in class in terms of the security, in terms of the value prop, the ability to use it for domestic, face-to-face, e-commerce, cross-border, the value propositions that many of our partner banks now offer, with the loyalty and recognition that you get, along with all the programs and offers that you get as a result of having a Visa credential. So we still have, it makes us be more competitive with our partners to make sure we're offering great solutions. So overall, I see it's a healthy thing. And I think our ability to collaborate with those payment networks is extremely strong. Where I feel it becomes unhealthy is if it becomes an unlevel playing field, where it becomes the international networks should be blocked and it should be only a local network that's allowed to operate. Then you lose the competition. You lose the value prop for merchants. You lose the value prop for consumers. So all I'd encourage, whenever I meet governments around the world on this topic, is I just encourage them, please, for the sake of your economy, please encourage competition, because that will be the best outcome for your consumers and the best outcome for your merchants, and let them choose the payment method that they want to use, either to receive payments or make payments. And generally, in economies I've found that do that, you see the economic impact is much more positive than economies that try and run closed loop systems that don't allow international operators in the market.
I mean, as a strong believer in competition, I fully agree with you. The more competition there is, the more number of people can actually make transactions, and it just makes sense for everyone. And if anything, that's basically consumer surplus all over the place where the consumer gets the best option. So fully agreed with you that it needs to be a level playing field, and everyone should actually strive to get more technology, more innovation in play, such that the benefit can eventually reach to the consumer. So just segueing from this, Tariq, how do you think that digital lending fits into all of this? I mean, you've got payment systems, you've got tremendous quantum of data that's available across the board. How can that be used to really unlock digital lending for the largely unbanked and I would say unserved businesses and consumers in Pakistan?
Yeah, it's such a great question. There's so much going on in this space at the moment. And we're continuing to work with our partners to find ways to continue to expand and also target the unbanked, and not only in Pakistan, but also in many other markets around the world. And this, the availability of data as a result of all this digital commerce, as well as people's other usage of digital capabilities, whether it's your phone or whether it's the bandwidth that you're using, the use of your mobile, you're suddenly able to score people a lot and businesses with a lot more detail than you've done in the past. So we're seeing some really interesting, innovative technology, not provided by Visa, but provided by domestic and regional technology companies that we're partnering with, that allow lenders to use different data sources to make lending decisions, rather than your traditional lending source. If you think about 10 years ago, to go and borrow money from a bank, you used to provide, printouts of your statements, and you have to get your grandmother or grandfather to sign, and those things to go and try and get a loan from a lender. These days, there's so many alternatives, ways of borrowing as well. There's installments, there's BNPL, there's different ways of accessing borrowing, but they're using also different data sources to make that decision. You no longer need your grandparents to kind of guarantee you. You can actually just use your behavioral metrics to highlight your credit worthiness in doing that. So I think it's evolving. We see a huge runway of credit growth that's going to happen in these markets, including Pakistan, over the coming years. And we want to play a positive role by we're not a credit lender ourselves, but we're a technology stack, by providing the right technology and also the right partners to allow the banks, fintechs, and other players to lend responsibly to the community. But it has to be done in a responsible manner, Ammar. But you've got great visibility on this through the positions that you hold as well, Ammar. So I'm sure there's lots for us to learn as well.
Yeah, perfect. So, Tariq, I mean, you've got a lot of experience in banking, and you've been in multiple markets. How exactly do you think a typical credit product can be developed in Pakistan from your experience in various markets, which can tap on whatever is being provided by Visa and really just unlock credit for, let's say, SMEs or small or medium-sized merchants? How does that work out? I mean, if you've got a future growth strategy for Pakistan, does that really blend in the overall structure? How would it work out?
Yeah, it does. I think it's always driven by the problem statement that you're solving for. So for a small business, it's really understanding what is the problem statement they need. And generally, it's in two buckets. It's either they need to make some CapEx investment, where they need to buy a piece of machinery or buy some additional infrastructure for their business of some kind, and they need to pay that back over a period of time. And there's some that need it as working capital. They've got demand, but they need to buy supplies to make it come to life. So generally, those are kind of the two buckets of credit demand that exist. So just making sure that the credit lending capabilities or solutions are addressing those needs in a way that's systematic. I've seen a great provider, for example, in Nigeria, that works with the markets themselves in these very, very small businesses. And I spoke to the small businesses myself. And the use of data by that fintech in providing credit to the small business is phenomenal. And their credit losses are minimal. They're not losing money at all. They're actually making money. But they're doing it in a way that's very client focused. They're really addressing a need in that market. So I think for all the credit lenders out there who are looking to kind of grow in this fascinating market in Pakistan, it's really making sure you're addressing a need and then using the tech to really enable that to be a great experience for that small business.
So if I were to zoom out a little bit, we have talked about the importance of Visa and for tech and for fintech, for consumers, for retailers. But what about the economy? Now, we have a very cash-based economy in Pakistan. When you have fintech, when you have banking sector, we have payment providers such as Visa coming in, it helps digitize the economy. But those benefits are not evident enough to increase uptake for digitization. So what recommendation or what advice would you have for economies as to why they should turn towards digitization? And have you seen that happen in other economies, in all the countries that you have operated in over your 3 decades of experience?
Yeah, of course. I mean, digitization, I think the ability to grow digital payments and reduce the reliance on cash, which is happening, it just needs to happen faster, just allows then for greater transparency of the economy to sort of come to life. So it allows businesses to build that creditworthiness that we talked about. It allows the government to have better transparency on how cash is moving around their economy and use that data to make better decisions. And then it also just gives more trust to consumers that they have visibility also on their own personal financial management of what's happening with their funds and their money as well. I'd say the way we look at it is really there's threefold. There's one is what is the impact that we can make in a market like Pakistan in terms of growing digital payments. And we work with fintechs, really exciting players. There's some new digital banks being launched. We're working with a few of them, as well as the traditional banks that have a huge network and history in this market. But then also we look at what investments we continue to make. And our team in Pakistan continues to grow. We're actually talking about what additional office space we need because we're expanding the team even further. And so that's really exciting. And then, so what other investments that we can make in this market? One exciting investment that we made was a program called She's Next, which is in its second round now. We're just finishing the application process. But we had a phenomenal program a few months ago on She's Next where we're recognizing female entrepreneurs. And the winner last year was a lady that ran a fantastic e-commerce platform here targeted at women sellers. So they had over 1,000 women sellers selling their ware on their platform, and we recognized and gave some more funding to the winner there, and we're running that again. So we're finding ways to invest in markets like Pakistan. And then the final thing is capability building. I highlighted earlier about the risk and the changing risk, and that we have a lot of visibility over that across the world, and we need to keep bringing that learning to our partners in Pakistan, to the regulator in Pakistan, to make sure that we continue to build the defenses around the bad actors trying to impact payments here.
I think with She's Next and with there's been a lot of women in tech programs, and I have seen, like when I cover those events, I have seen those same women few cohorts later become mentors, and their businesses have become examples, and then their businesses are being profiled. So yes, I think be it the banking sector like Standard Chartered and their programs, or be it Visa and She's Next, I think they have a phenomenal role to play in empowering women, and that is why we need players like you in the market so that women empowerment, SMEs, those sectors get covered more. But my last question to you would be, with all the markets that you have been, what is the one lesson that you saw in some other market that could be duplicated in Pakistan?
So I was thinking through this on my way here, and there's really three things that I look at that can determine the success of the growth of digital payments in markets like Pakistan. And one is just the macro situation, and how's that looking? And I have to say, just from looking at the data and things, of course, there's always things under the hood, but just things seem to be in a positive stance at the moment with FX reserves, with stability of the economy, the reduction of inflation, reduction of interest rates. It looks like some of the basics of fundamental economic growth are there. And I'm really hoping that will continue in the years to come. And stability is so important to attract investment. So that's a really key part. And then we look at really the quality of our partners in markets like here and look at their leadership team. The ability to execute is so important. How can you bring things to life quickly? How can you create value propositions that can impact merchants? We talked about lending to small businesses or providing great experiences to consumers so they're excited to drive their own growth as people as well. And then the final thing I look at is just our own team. And I have to say I'm hugely impressed with the team that we have in Pakistan. It's a phenomenal young team, great energy. I spent some time with them earlier today. And I think having those pillars, both the macro, the partnerships that we have in our own team, just gives me huge confidence for the weeks, months, and years ahead here.
That is great to know. With everything that is happening in Pakistan, it's very comforting to know there's still investment coming in. There's still foreign companies very much invested in growing with Pakistan. So, Ammar, if you have any closing thoughts.
Yeah, all right. Tariq, this has been a fascinating conversation, and I believe we can just extend it a few more hours if it was up to me, but sadly, we've got time constraints. So just wrapping it up, how does the future look like? I mean, if you look at other major Western markets, pretty much everyone's moved cashless. I don't remember the last time I actually used cash to do any shopping outside Pakistan. Rarely do we use it. It's plastic, digital, tap, so on and so forth. Pakistan, as Pat mentioned earlier, there's still a lot of cash, and which they basically means a tremendous market opportunity to really tap. What do you, in an ideal feel, in an ideal case, the growth for Visa or cashless transaction looks for in Pakistan, and how do we really get to that future state?
So maybe a couple of thoughts that, and I'll just step back and maybe just talk a little bit about some of the amazing innovations we're seeing broadly in payments. And I think agentic commerce is really exciting. So one of my new 2026 resolutions is I want to order flowers more often for my wife. And so I went on, and I want to do that quite seamlessly. So I went on ChatGPT to say which are good florists for me to order the flowers from. And there's only so much you can do right now on AI platforms where you can search. But the actual payment, I had to go to the website of the flower shop and then place the order. Now, if I want to do that, say I want to really be a great husband and do it every few weeks and have that repetitive, I would love to be able to do that on agentic commerce. I'll say choose the best flower shop, make sure it's up to this budget, don't go higher than this budget, but change it every 3 weeks and make sure it gets delivered home and make sure you SMS me once it's delivered. Agentic commerce is going to enable that experience to happen without you having to go to the flower website. You can just do it through the large language model, or whether you're using Gemini or ChatGPT or whichever platform you're using. So I think that's already happening. We've gone live with one real estate company in Abu Dhabi, Al Dar, for the first agentic commerce transaction there, and we're looking to now roll that out around the region. So I think that's not far away. We may think it's like light years away, but it's not. This is months away, possibly 1 or 2 years away from reaching many of our markets. And then the other interesting space that's going to be transformational is the use of stable coins as a settlement mechanism for transactions. So if you're a small business, at the moment, if you do a transaction on a Sunday, you may not get the payment till Monday or Tuesday because the banks are not open, whatever else, or Friday, depending on which day of the week or which jurisdiction you're in. Whereas with stablecoin settlement, it's going to allow small businesses around the world to receive their funds a lot faster, in a secure manner, etc. So I think it will improve the speed of delivery, and that's just one use case of what stablecoins can do in this industry. So I think we've got so much to look forward to. Other than just the traditional displacement of cash, I think we're going to have phenomenal consumer and merchant payment experiences that are going to grow as a result of the technology that we're seeing today.
Thank you, Tariq. This was very insightful, especially the bit about stable coins. I mean, you would think how they can really embed in the overall scheme of things and essentially unlock value for all players, whether it's the merchant or whether it's a consumer out there. Thank you, Tariq. It was a wonderful conversation, really, really insightful, and I just feel this definitely calls for another follow-up conversation whenever you're in Pakistan next.
I'll look forward to it. And make sure you order the flowers as well using your Visa card.
Yeah.
I hope my husband
Thank
takes
you.
that advice as well.
Thank you so much.
Thank you. It was absolutely a pleasure having you.
Thank you.
Bye.
It was so fun. Thank you so much.